Good morning, trading world. It is January 20th, 2022, 7:31 a.m. on the East Coast. And this is my pre-market outlook and technical analysis for day trading the SPY. Well, I hinted at it yesterday about a bounce building under the surface, and I wanted you to be patient as far as not taking any long positions yesterday because I felt like there could be another dip back toward that 451 area or below. And after market or at the end of the closing day, we got it. And actually, that would have been a great time. And actually, I had planned on putting on some long positions at the close, but since we got that 451 that I was looking for, I was too busy closing out short positions that I didn't get a chance to put on any long positions. But it's okay, we can do it today. And I want to get into another analogy. Before everyone gets too excited about the bounce taking place, I want to give you an analogy as to how I see this bounce. Alright, and here goes the analogy. Have you ever been to the beach or a pool ready to get in, but you dip your toe in and it's super cold? So in order to deal with the barrier of cold, you decide it's only one way to force yourself to go through with getting in. You turn around, walk a distance away, and then out of nowhere, you turn around and start running and you just jump in. Well, the market just dipped its toe into the cold waters of the next level down yesterday and overnight. And at the close, this bounce would be like that turnaround and walk away to psych itself up to break that barrier. And let me go to another chart setup, and I can show you on the map what that next barrier is. Alright, and right here, this is the 453 level. This basically is that next pool of cold water between 453 all the way down to 443. And as you can see, we basically dipped our toe in and came back up, and we should get a bounce here soon. So that is how I am looking at the bounce. Alright, give me a second. Let me bring up our key levels to watch for today. Alright, here we have the key levels to watch for today, starting with resistance. The jack resistance is going to be 455. The queen resistance is going to be 458. And the king resistance area is going to be 460 through 463. Coming to the support side, the jack support is going to be 453 through 452. The queen's support is going to be 451 through 449. And the king support is going to be 443. Battlegrounds. The battleground to go lower will be this 451. However, I I doubt that we break below this level today in order to get the bounce underway. So that's kind of the line in the sand in order for us to bounce. And then to go higher is the 455 area. If we break the 455, we should fly. Also, something else to remember today. The market maker's expected moves lower edge is around 455. That's our jack support. And it's going to take a decent volume push to get off of that level. Just like yesterday, I said that that level would be very important, that we would chop around that level and visit it probably several times. As far as today, again, it's going to take a decent volume push to get off of that level. We may spend a little time chopping around that area today. Now, looking ahead for me, the ceiling for this bounce could possibly be somewhere around the 466 through 469 area, or at least where we see if there's enough fear of missing outers and buy the dippers to jump on to give this bounce some power. But that 66 through 69, 466 through 469 area, I think that may be the ceiling. Not completely sure, but just throwing that out there now. This is something to be prepared for. Now, let's get into today's scenarios. All right. The first scenario and most probable scenario, as you can see, it has a 55% probability of happening today, is the trend day up structure. And the way we map this day out is that we begin with a gap up on the opening, but we're going to fade back towards yesterday's close, which was 451.75, and somewhere between where we are now and that 451.75 we should find support. And we find support, maybe chop there for a moment before reversing and taking off. This is where you take advantage of the leg. Don't come in at the opening, especially if you see the fade start. Don't come in buying. Wait till we find some type of support to buy. And for me, the best way to take advantage of this is either going to be through call debit spreads, or the more likely thing that I will probably do today is probably going to be put credit spreads. It's pretty much where if you're using the put credit spread, you're going to sell the higher strike put and buy the lower strike put. One of the reasons I will probably be doing this is because I'm not sure how long this bounce will last. And I like to do what's called breaking the legs. So if with me taking use of these put credit spreads, the higher strike is going to lose value. And once it loses value, you can profit by buying back either the entire spread, or you can do what's called breaking the legs. And breaking the legs is just buying back the short put. And at that point, you leave the long put. And what you have to be careful of, if you mistime this and you leave that long put, it could continue to lose value. And often what I will do is I would put a calendar twist on this, where I would buy the longer, the long put would have a longer duration than the short put. I'm not going to get too deep into that right now, but I feel that this would be a great way to take advantage of the volatility, because puts will lose value very fast if the volatility starts to shrink up a bit. And this is also the same reason that I don't like buying straight calls on a rally like this. However, I have seen, I'm not saying that I'm not going to not use just straight calls, because in another account I will probably buy some straight calls. And the only reason I'm going to do that is because I expect at some point this rally will be so fierce that volatility will hold. I have seen it on enough occasions when the rally in these type scenarios, when they become so rapid and so violent, that volatility can actually go up on the rally. And so for that reason alone is why I'm probably going to be willing to try my hand on some calls in my directional account. So that's the first scenario. That's the trend up. That's what I'll be preparing for the most today. Scenario number 2 is going to be the expansive range day structure. We could look to set a decision area upward boundary of 457 before chopping lower back towards overnight lows. It's possible to take us back to that 451 area, then trying to push the boundary up again. This is how I see the range day scenario playing out today. We're going to fade off of the opening, and we should find support. Give me just a moment to correct something here. For the range day scenario to work, we should more than likely dip below the opening. And once we dip below the opening, we're going to get the rally up, and we're going to come back down, but we should create a higher low. That's what I'm going to be looking for, to create that higher low and then another bounce. that's how I see the actual range day. I'm going to have to go correct this, but the expansive range day, I do think the decision area to go higher is going to be that 457 area, but it's possible on the range day we come close to testing it but not break through it today, possibly. Again, like I say, range days are the hardest to map because there's so many different variations that could happen on a range day. But on a range day, you have to be satisfied with where you catch the low in buying your call debit spreads. And again, the call debit spread is just where you buy the low strike and you're going to sell the high strike, which should be your target. So if you have a target of 455 or 457, that should be the strike that you sell. That is scenario number 2, which has a 23% probability of happening today. And let's bring up the last scenario. The last scenario is what's called the rounded reversal day type structure. It has the lowest probability of happening today. One of the things, this would be easy to identify at the open. If we fade at all at the opening, it's not going to be a rounded reversal day. But just to prepare you, just in case it is, on the rounded reversal day, we usually come into the opening and we continue up. There should be like a momentum building before the open, and we take advantage, and it's like being shot out of a rocket, and we should head up from that point. We would head up and we would reach our midday chop at one of the resistance areas, either the queen or king resistance area. And I have that incorrect. Give me just a second. All right, on the rounded reversal day type structure, the key thing is, if we take off up, it's very sharp. We should reach our midday chop area around either the queen or king resistance area. And the key thing about the rounded reversal is that the same energy that we use coming up, we're likely to see that same energy going down the second half of the day. The other thing that I want to prepare for is that the rounded reversal day has another variation, something that could also happen today. But again, this is not the most probable situation. On the rounded reversal, we could see sharp down, reaching our midday chop around what could be the queen support, and then using that same energy to come back up. That's another variation, but I usually don't get this deep into the lower probabilities. these are the things to be prepared for today, mainly scenario 1 and scenario 2. That's the trend day up and the expansive range day structure. I'm going to close out this morning. As always, please know and define your risk, and profit will come. Wishing you a successful trading day. Have a great one.